Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. The opinions expressed in the program by the host and the guests are their personal opinions only. Remember, feel free to subscribe and share with like-minded friends. My name is Deryck. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gaur, Managing Director of State Street Digital Assets.
Good morning, good afternoon, good evening, wherever you are in the world, and welcome along to another episode of Beyond Bitcoin. My name is Deryck, and I'm here today, of course, with my friend and colleague, Nitin Gaur. Hello, Nitin.
Hey, Deryck. And I take it that you're in a different country this week. It rarely happens that I'm sitting in the same office in the past 3 weeks, and you've been to Europe, you've been to London, and now you're in Singapore. And today was another unique day for me because my first call was with you and my last call is with you. So it's all about different things that we are trying this year. This
is extraordinarily unique, Nitin, because of course you're a global traveler that's perpetually in motion. So it is unusual. You're locked at home for 3 weeks and I've been out on the road. But yes, in Singapore. So obviously on the homeward leg back down to Australia. And I started a discussion this morning with good morning, good afternoon, because it is back into my time zone again. and yeah, Singapore's such an amazing city, of course. It's just an extraordinary city, amazing accomplishments, extraordinary architecture, and very switched on people. And we've been meeting with our distributor here, and we've also been meeting again with a banking platform. And the banking platform's looking at how to onboard the fund so that it becomes available when the market picks up again, which is their general view. Their turnaround is onboard it in a bear market and have it available in a bull market. So we're delighted to hear that, and we'll be working with this organization to do just that. But thanks for helping us out last night. And so last night we presented to 30 people in a roundtable kind of environment, and Nitin came on board and talked around the technology. And I found it typically intriguing at the level of difference of understanding of the space still. And it went everywhere from I actually have investments and trade in this space down to isn't Bitcoin used to sell drugs? And it's still there. Our education requirements are going to go for a long, long time because it's a different space. But I had one experience that I've reflected on, and I think it's extraordinary. And I think for the listeners, they've probably experienced this too along the way. And that is a visceral dislike for digital assets, a shaking, visceral dislike. And I chatted to this person after our presentations, and this person said, I see no use case or reason for cryptocurrencies whatsoever. And I said, all right. And he said, there's no need to change the existing system and it works okay. Maybe you could improve it. And I said, all right. And I said, what do you do? He said, I work in the finance industry. And I said, all right. Briefly after I discover, actual fact, he's a foreign exchange trader and has worked right through the finance industry. And foreign exchange is one of the things he's done. And so I found that intriguing, and it made me reflect upon the fact that our financial system wasn't created in the Big Bang 13 billion years ago. Our financial system was created in the last 100 years or so. It's just a creation. It's just more sophisticated than the game Monopoly. It's just a creation. And you have to reflect upon what it might have been in the Solomon Islands in 1927 when the government finally turned around and said, no, the conch shell is not going to be our means of exchange, right? And they would have every argument why it should be the means of exchange. It had been the means of exchange for nearly 5,000 years. All their living history, the conch shell had been the means of exchange. So why would you ever change this little shell from being the means of exchange? It feels good, it's not so big, easily transferable, easily transportable, et cetera, et cetera. So what the government did is it negotiated a half point and it bought out tokens with the conch shell on them. So the coins they made actually had the conch shell token on them. And that segued the the position. So we as humans hold belief systems obviously very strongly, so strongly that you shake with anger if your system is going to be disrupted. And that was another lesson last night, that despite our absolute evangelistic view of how extraordinarily disruptive and positive this world of crypto assets, cryptocurrencies, digital assets is, there'll be those that still want to keep the conch shell in place, because after all, it's been there for 5,000 years.
That's amazing. And forget the conch shell or cowrie shell. So you could have actually gone all the way back to the island of Yap, the original Bitcoin, which is what which was the original ledger. And actually, I've been to Ireland. I traveled. It was an interesting journey, Deryck, when there was only one flight a week. So you're stuck in the island for 7 days, and it's a beautiful place to be stuck at. And I went to Palau, of course, and from Palau we went to Yap, the island of Yap, and there was the original island where they actually would mine the original mining of Bitcoin. This is how they would mine it in this round thing, and that would be a part of the wealth, and people would know who owns that. It's transparent ledger, and it was inscribed on that to who really owns it, and everybody knew who owns that, and the exchange would happen public, and the inscription would change. And the world hasn't really changed that much. We have just changed the modality of it. I think we still have inscriptions, which is the new thing in Bitcoin, as you know. So I find it hilarious that we keep going all over again with different modalities that we are used to in terms of changing the economic system we live in. So that's a hilarious story. But yeah, everything works great. And I've actually heard that with central bankers too in my conversation, to say, hey, our system works fine. Why do we need to change it? And my rhetoric to that response there, and this is one of the meeting of all central bankers, and we're looking into technology, and I was representing in terms of how technology changes our lives and how it's deflationary in nature and how it has the potential. And I was posed a question amongst everybody around me was central bankers, so I had to tread it carefully in terms of saying, hey, our payment systems work fine. It's a global system and we're doing fine with this stuff. Why do you want to change it? And my response to them was that it's not about just payments. It's about the ability for accessibility. It's about the Web 3.0 notion that if I'm really tokenizing my sort of healthcare records and other things of value, then do I have a medium of exchange that allows me to be able to keep up with the digital elements, and tokenization becomes central to that whole model. And that's why I think whether you take up a path to tokenize fiat, which is CBDC and stable coins and likes, or rely upon the ability for us to exchange them into crypto assets, which is what the world is doing today, you have to make the call as to, at some point, do we keep up with the tech? Do we keep up with the global movement of, where things are heading? That was exactly the same conversation I've had as well. So you have to be respectful, of course, because it's a perspective and it's point of view. And to be honest with you, crypto industry is not exactly helping itself with all the challenges that we've seen in the past few months, I think. Deryck.
I agree with that. And it's a conversation I have to learn, that when someone is absolutely dedicated to gold, is no purpose for Bitcoin to exist. It's not a winning discussion. And so I've learned to nod my head and move on because gold is just a belief system, and Bitcoin is a belief system too. And it's just a matter of which belief system you're more attached to. And obviously many find that, like the cowrie shell, as you correctly say, the name is there for the transactions. Many see gold as being around for 5,000 years and accordingly must be around for the next 5,000 years as the prime mode of store of wealth. And we that are looking at the digital aspects and digital advantages of an algorithm-driven system can't quite get our head around why we'd still want to carry around these beautiful gold rocks and claim them as our banking system. But
yeah,
belief systems. So a very progressive city, Singapore, and the people generally have been most interested in what's happening in this space. I could see them as a city that is going to really adopt this kind of technology. But at the same time, you need to put in guide rails to make sure that it adopts it with safety. And that's just something they've done in the last week, haven't they?
Yeah, they have. And in fact, I find MAS, and I think one of my colleagues who are at IBM now is working in the fintech office, and I chat up quite a bit when I meet him, and a lot of progressive agenda, not just in terms of staying open, in terms of adopting some of the challenges, but also, Singapore historically, when I was at IBM, we had Project Ubin, and they had 4 or 5 phases of Project Ubin, which is figuring out central bank digital currencies, which is both for retail access, but also for cross-border payments, and then eventually towards security settlement, which is sort of some of the vectors of how money moves around the world. Now they have Project Guardian, which is looking into utilizing some of these automated market makers and the likes of decentralized exchanges and how they can be employed in dealing with the existing securities and things like FX and ability for them to be able to have a pool of various currencies. I think Singapore is one of the unique places where you can actually have a Euro account, a USD account, and Sing dollar account. You could go and actually have account in those 3 different currencies, which I think is quite unique from that perspective. Yes. Also, Singapore has a massive influx of Indonesians and the Filipinos and the overseas foreign workers. So there's a lot of busy remittance corridor between Singapore and Southeast as a Southeast Asian hub of innovation and labor. Standard of living is high. Malaysia is next door. So there's a lot of confluence of some of those things, at least in my study that when I was there. So I think it's a very uniquely positioned space, not to mention the fact that it's a fintech hub and the fact that it has a massive reserves. It's also involved with a lot of nourish, which is making some significant investment in capital markets, and it has a sort of flourishing capital market infrastructure that's evolving, which allows them to be able to invest in foreign equities. And there stems the issue with their ability to be able to move money, with the adequate, controls, even though I don't think Singapore has capital controls, and they cannot, given the fact that you have the ability to maintain your account in 3 different currencies. I think it's a super fascinating place, Deryck. And I'll say one more thing and I'll pause. I don't know if you've actually encountered it, but today, and this is exactly what I think a regulatory agency should do, as opposed to, enforcement that we've seen largely in the US, is today Singapore and Thailand both have, so the Thailand Security and Exchange Commission, which is equivalent to SEC in the US, and MAS, which is again the Monetary Authority of Singapore, have talked about sort of the digital payment token, which is essentially for forbidding the virtual asset service providers to persuade the general public or any other active manner for them to be able to prevent the deposit taking and lending services. So as you know, the past, which is last year, we've seen this with 3AC, we've seen with Celsius, that there's massive promise of returns. And people have taken the asset and rehypothecated and lend it to other entities, which obviously there's some risk taking when you lend assets. And so they all stepped in. Singapore stepped in, Thailand stepped in today, and they actually have forbidden them to advertise or persuade the general public for retail investors only. And I think that's a necessary step because, MAS has observed that significant consumer harm, because now you're actually asking not so well-informed retail investors to make the investment in expectation of profit. And of course, the risks are very high in rehypothecating asset. And they basically stepped in and say, you can't really do this until we fully study or until you actually carve out a risk model framework for these things. Exactly what a regulator should do, I think. They didn't ban it. They stepped in. They had strong concerns. They made aware that this is what, and they said that we are requiring you to be able to take the necessary steps and not go down this path before it hurts the general public. Brilliant, I think.
Yeah, I agree. And the area is one fraught with risk. Regularly on very exchanges such as Binance, you can go to it, stake your tokens, drop down, choose what you're staking. Well, certainly over the last 18 months ago, and stake the tokens against a whole variety of different token offerings, etc. And there was real risk. There's disclaimers, but the risk was very hard to quantify. So much so that I regularly remember looking at it going, right, my return's going to be 10% or 15% per annum or 8% per annum. Come on, it's a volatile asset. It's probably going to go up 8-10% or potentially go up 8-10% in an afternoon. What does it matter on the staking? And so I often just looked at it and said, risk is too high. Volatile asset doesn't matter. Keep it in the cold wallet. So I was making those decisions with, somewhat more informed, background. I could imagine the average person could look at that and go, wow, 25% return per annum is fantastic. Risk it without realizing quite how it's staked, what liquidity pool it might have gone into, how it's getting paid, etc. Yes, I agree. Good set of regulations, good progress forward. So not necessarily the same progress or regulations that we've seen yesterday, with the BlackRock application. Could you mention BlackRock's application being inadequate as a first question? Is that sort of likely, or just simply a process of dealing with the SEC? Tell us a background on it.
I think it's a process. So, for example, when you file an ETF, the spot ETF, which is basically the primary concern SEC has cited in the past for spot ETFs, is that there could be market manipulation that leads to a different valuation in a different market, which is the traditional OTC, which is over-the-counter trading, which is you going in exchanging assets, versus how it would reflect in ETF space, where some manipulation could impact the valuation, which will disadvantage the same asset class in two different sort of areas. And that has been the concern, which historically, as you know, the Commodity and Exchange sort of Commission, where the entity that deals with commodities, they have actually approved the futures ETF, which future, as you know, is a derivative.
Yes.
And CFTC has approved derivatives as an instrument and both derivatives and spot get the data from the same market. These are exchanges that provide the market data that's necessary to value the asset, which then leads to ability for the market to be a buy and sell, because it's fair valuation. And this goes back to our past conversation we've had of efficient market hypothesis. So SEC in that, in the past has always declined spot ETFs, but approved future ETFs with an assumption that, hey, if CFTC, which is the peer agency that's responsible for derivatives, has approved a certain instrument, then we will piggyback on that approval. And the industry always said that, hey, they've approved this derivatives, but these data source and the market data is from the same, source. And so in many cases, SEC essentially now with BlackRock, which of course has the most brilliant asset managers and lawyers, they basically said, fine, if that's your concern, then we'll do this surveillance sharing agreement. Surveillance sharing essentially allows for the industry, which is self-regulating, but also gives an avenue for the likes of SEC and CFTC to step in if they see a market manipulation happening. And what they have done essentially is saying that we will have this surveillance sharing agreement between NASDAQ and Coinbase as two sort of exchanges to say, our primary exchanges will be these, and we will be able to share that information of trading that's happening on these platforms, thereby giving the regulators more power and more insights into if there's any insider trading. And this actually comes from the conventional world where you could have insider trading, you could have all kinds of manipulation in the markets that could impact the pricing. And if the pricing is not accurate in both sides, then that creates an imbalance in the markets in general. That was the thinking. And what's amazing to me, Deryck, is the speed. This was just filed a few days back. They got a response back of inadequate, and they filed back again today that equities trading SIBO, it is a trading giant, refiled the listing applications for Fidelity, for VanEck, WisdomTree, Invesco on Friday, with Coinbase helping them to monitor manipulation in in the spot markets. And today, NASDAQ also refiled BlackRock's spot Bitcoin ETF applications, naming Coinbase as a surveillance sharing partner. And what's amazing in this is that if you recall the past, where these things would take, like if you look at Grayscale, their application took months before they got any. And this has happened in a matter of just 2 weeks.
Yeah.
So the industry is quite positive on this ETF. And again, these are like 5 big giants suddenly have the same filing. I have mixed opinions, but I'll pause here. That's what happened here. Yeah.
And with interconnected cooperation between the organizations too, by the looks of it. They're using similar validators and they're using similar organizations making their application through. So it looks to me as though the sort of traditional finance groups are actually working together as one to make their applications through to the SEC and make sure the SEC takes note of how serious they are to have a Bitcoin
That's right.
application. Bitcoin ETF in place. It's intriguing. I think the SEC has their hands full with this one because they're dealing with the absolute giants of the space. And they're dealing with those giants, frankly, who are using good intent with the intention of starting an exchange traded fund in a well-known now commodity that exists globally. Why shouldn't it be listed on their exchanges and on their ETFs?
Yeah, well, what's interesting to me is SEC just sued Coinbase for operating a non-unregistered exchange that deals with securities, and they've listed other securities, and they've. So I'm only looking at the circular thing that Fidelity, VanEck, WisdomTree, Invesco, BlackRock, they all have cited Coinbase as the surveillance sharing partner. But Coinbase is already in suit for operating something that SEC doesn't recognize as an exchange. So that's one issue. And the downside of the whole thing is I think that the moment you start getting into these ETFs, which I think has done a positive thing for securities because you have intraday, you can sell, it's liquid assets in general. But the apparatus behind it, ETF is a fund. You need a transfer agency, you need a custodian, you need a broker-dealer, you need to have a distribution mechanism. So you're piggybacking on the same apparatus that is involved in a traditional ETF that's maybe a part of a mix of commodities and in many cases securities. And I oftentimes what have we achieved if we are now having the same segregated players having the same role, except that now they're holding Bitcoins and the fee structure, because isn't what we're trying to fix is that fragmented market infrastructure and bring them on the same, so what have we really solved if we're, yes, it'll in the temporary, it'll give exposure to a lot of funds, a lot of retail investors through the broker-dealer networks like Fidelity and Schwab of the world, and give them access to Bitcoin per se. But does that really solve the DeFi conundrum? Does it really solve the ability for us to flatten this market to make it more efficient? Suddenly now you have the gaps and the entire process still remains the same, while the technology will push, in many disruptive forms, because, things could happen in peer-to-peer network that may not exactly be a part of the exchange mechanism, that if Coinbase is the only surveillance sharing partner and it's oblivious of the lion's share of trading that may be happening between peer-to-peer and other parts of the world, how do you absorb that pricing? And that to me is interesting in this entire scheme. And I would say this to audience, Bitwise, about 4 years back, they had this amazing 136-page PowerPoint, which talked about this very problem with the SEC. They went to SEC, and at the time, I think it was Jay Clayton, when they were presenting this to SEC, and SEC was still on the fence for the very same reason, because it doesn't have enough adequate sort of surveillance sharing information for them to be able to address the market manipulation clause. It's interesting, Deryck. I don't know where this is going to go, but I have mixed feelings. I think it's great that this is going, because it really validates Bitcoin as an asset class, which is great for the industry. But if it becomes an ETF, then what have we really achieved after almost 14 years of its evolution?
Well, when you see major infrastructure in place and you see legacy software as a services and you see legacy technology, you often see transitions which include part of that legacy technology to the next technology. And my earlier discussion today about a visceral response, I think this is a human response. We are utilizing infrastructure that the major investors understand how to utilize, and we're trading in the future technology on that infrastructure. Yes, it's not ideal for the evangelists like ourselves, but on the other hand, it's an introduction to how the industry should start to learn about the particular space. And I think it's a good thing in progress forward. It's interesting, the impact and the anticipation of the value of these ETFs. I mean, Bitcoin Cash has gone up some 160%, I understand, over the last 2 weeks because of the proposed exchange in the US having BTC have come through with that exchange. Quite extraordinary, because people have immediately assumed giant liquidity, demand in place, this is going to be a future product. And taken on in a manner of which, now, BTC shouldn't be necessarily transacted on a very traditional exchange owned by a whole lot of banks in the purest sense of the word. But again, it's a form of adoption of the technology. And I think for that reason, it's still a positive thing. One has to realize that if decentralized finance continues to grow and DEXs, decentralized exchanges, continue to play a major role, they'll become, and people start getting more effective and efficient wallets, easier to use, people will ultimately start swapping on decentralized exchanges. They're less expensive, they're fast, they're able to do this instantaneously on their phone. It may well be that the market will flush out how effective centralized exchanges are, or how effective ETFs are to be able to get to own product. And so in due course, the market will flush out whether these systems work efficiently and effectively anyway, is my thought, Nitin. What else has happened in this week?
I agree. And no, this week has been actually quiet. It's not been, except the ETF galore and this news here and there on some regulation somebody's passed, which to me is like, I'm looking at more innovation side of the house, like what is industry doing? There was an interesting announcement of Polygon, which of course Matic, their token was deemed securities. They were delisted.
Yes.
But they came up with essentially switching to completely zero knowledge proof networks, which was a quite interesting feat for them to be able to address privacy preservation, address some of the technical challenges, which to me was super interesting, but it got lost, that innovation, the announcement from Polygon got lost in this noise of all the, that we have seen, especially with MasterCard. I mean, you're in Singapore, yes, and you were in London, and they basically announced the element of tokenized deposits network for developers to go and build the application on top of that. And what's interesting, Deryck, is if you look at CBDC, which is sovereign issued, central bank issued digital currency, if you look at stable coins, which essentially is a centralized IOU model, that I'm going to keep money in an account and I'm going to issue a stable coin, and I'm going to rely on this interest rate that I'm going to get, but you can use this as a payment instrument in the crypto ecosystem. And then you have this new notion of tokenized deposit. And I went down the rat hole, of course, trying to understand that at the end of the day, they all represent fiat. They are a form of a digital fiat. But central bank is, again, issued currency is a sovereign issued asset, which is determined, the value is determined by the markets. Stablecoin is piggybacking on an underlying fiat. And then tokenized deposit essentially is tokenizing a deposit, which essentially the intent is not to change the money supply, because many of them have this M0, M1, M2, which changes the money supply. And to prevent from being labeled as changing money supply, the idea is I have Deryck's deposit, and if Deryck wants to move the deposit from one bank to another bank, they can move that. So I'm not essentially changing any money supply. I'm essentially I'm transferring the funds like you would normally do. So I begin to look at that stuff. And this last week alone, between BIS and Bank of England and this joint project, you had Project Guardian and you had sort of Project Meridian, and you had a bunch of these projects which were targeted towards CBDC. And that was interesting. And then same week, you had MasterCard announced sort of MTN network. I think it was interesting. But I mean, Bitcoin being at where it is today gives me comfort that it's roaring back. The market cap is 1.26 trillion. Bitcoin is 604 billion. From numbers perspective, the Ethereum market cap is being consistent at 235 billion. So I think, in general, the markets are gung-ho on this. And I think the next week is yet to be determined, but I'm beginning to now getting wary of a regulatory announcement by some country, some nation somewhere, and that's eclipsing, I think, what digital assets and the resulting DeFi ecosystem is meant to do, is to revolutionize and modernize the financial system. So, but I do see the ETF news as a convergence mechanism that when industry adopts it, then not only Bitcoin, but there are other facets of crypto industry that begin to see value in. I see that as a positive news for the industry, for our industry per se.
I agree, Nitin. I like the way you call it a convergence mechanism, and it's a more positive way of looking at it than my statement. It's a legacy transition.
Yeah.
But I think what we learned at the very beginning of this conversation, when we were talking about the shells that were currencies for thousands and thousands of years, is that mankind goes through a process of transition, and it's not black and white, and it's not instant from one to the other. And we're seeing it in this much more sophisticated society that we now live in versus the Solomon Islands in 1926, 27. And we're seeing this transition occur now. And the existing infrastructure of financiers and the finance industry and the banking industry are working out how through CBDCs, how through existing ETF exchanges, etc., how they can start adopting the technology and trading the technology. And I think that's a natural way of things. Maybe for us absolute evangelists and purists, we look at it as nonsensical in some cases, but I think it's human nature, Nitin. And so, look, next week I'm back in Australia, and we'll be following up with a number of banks and activities, etc. Still, no doubt, dealing with people that are fascinated by the space, enthusiastic about the space, and don't like the space, and seeing what the news is going to be. Where are you next week?
I'm now planning a trip just to counter your travels, Deryck. So that planning is in the motion. So I'm planning to either go to Europe. I have a conference in Frankfurt in second week of July. I plan to be there, and then I was invited to speak at SparkCon, which is Chainlink, a very interesting project. At the end of September. And if audiences, I have 2 free passes that's given to me as a speaker. So if audiences reach out to us with recommendations, I may extend that free pass to our audiences as incentive for them to connect with us and tell us what they like and what they don't like and what they want us to talk about. So that's something which I think I promised the organizers that I'm going to talk about Chainlink and what they have done and why that's interesting. And what is my perspective on this, both in terms of the role of traditional finance in the crypto finance, which is what we've been discussing all day today. So looking forward to that. And I have to, again, my whole attempt now, Deryck, is to keep up with you. That's my only objective for the next few weeks.
If you flew nonstop like I've done for the last 3 weeks, it wouldn't even put a little chink in your frequent flyer points.
No,
I'll see you next week,
Deryck,
from wherever you are in the world, and catch up with you then and see what news is happening indeed.
All right. Take care, Deryck. Safe travels.
Good on you.
Bye-bye.
Bye, Nitin.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin, Gaur, or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.